Albo has gone to the stock market to solve the housing crisis. How will he go? Should we go to the stock market too to pay for the submarines or the schools or the hospitals? Now, it's commendable, don't get us wrong, that the government has come good on its promise to do something about the housing crisis. That's homelessness, soaring rents, the dearth of supply. And predictably, it has bumped into some nasty opposition from the Greens and the crossbench. Well, Labor claims that it's nasty. You know, the perfect is the enemy of the good and that sort of thing. But is it really nasty or not? Let's have a look at the detail here very quickly. The signature reform for the budget is the HAF, the Housing Australia Future Fund. And the aim of the HAF is to finance 30,000 new homes over 5 years. The problem is that there are 640,000 people who need social housing. So what is the HAF exactly? Is it a payment? No, it's a $10 billion loan from the government to a fund, and the returns or the yield on that loan will finance the 30,000 homes. So it's a punt, a share market punt. And as Senator David Pocock puts it, governments will fork out 10 times as much in tax concessions for property investors than the HAF will generate. That's if the share market behaves impeccably, which it doesn't. Share markets tend to go up and down. $10 billion a year in tax breaks for property investors to buy their second or 10th house versus a loan and the yield on that loan for more disadvantaged Australians. Now, at the heart of the problem here is that, as always, it's politics and money. The politics is that there's a loan, not a payment, so it keeps Jim Chalmers and his budget looking fiscally responsible. Whether it's morally responsible, however, is another matter, because the $250 billion which goes out the door in stage 3 tax cuts, or $20 billion a year in payments to high-income earners from next year, goes to the same crew which benefits from the negative gearing and other subsidies on their housing investments. Now, bear in mind also that politically there are votes in all of this because 65% of Australian households own their own homes. 18% of these are landlords. So this demographic is powerful, and it's very keen for their asset prices to keep rising. Just 1% or 100,000 households are new buyers to the market each year. So if the government were to shoot down house prices to make them more affordable by, say, 30%, that would wipe $3 trillion from the largest market in the country. Housing, $10 trillion. 65% of households. So the numbers, the politics are clear. Property lobby does not want more supply. They want to contain supply to keep prices high, and they don't want meaningful reform. Take a look at Singapore, for instance, where they've recently lifted stamp duty on foreign buyers to up to 60% of the purchase price. Now, it's true, and it is commendable too, that the Attorney General, Mark Dreyfus, is finally beavering away behind the scenes to fix Australia's anti-money laundering laws to make lawyers, accountants and property developers report the source of their income, like the rest of us, like banks and casinos. It's 16 years too late and coming only after a lot of international pressure, but it's a good thing. It's a good thing that first home buyers will not have to compete so ardently at auction with shady foreign buyers unknown. The other, perhaps hotter component to all this is migration. As Alan Kohler points out in the New Daily today, growth in new dwellings has flatlined for 15 years while migration has risen strongly despite the COVID blip. The Treasury forecast, he says in the budget papers, of 400,000 net overseas migration this year and 1.5 million over 5 years is the difference of arrivals and departures, and is a one-off catch-up after the COVID pandemic. Then there's the bloody Airbnb Mafia, pushing up the price of short-stay accommodation deals in the regions, which means the very people on the 3 tax cuts with the $10 billion in property investment subsidies are crowding out the people who need somewhere to live. So what do we have? We've got essential workers competing against Airbnb landlords in the regions. We've got first home buyers competing against foreign investors wanting to park their money somewhere safe. We've got struggling renters competing against subsidised landlords and migrants working 3 jobs to get ahead. And we've got some $36 billion in tax breaks for mostly wealthy superannuants, cross-subsidised by younger workers, versus the $40 billion for aged care pensioners. There's almost as much for the people who need it as the people who will be passing on their wealth to future generations. It is not a level playing field. So what's the answer? Get the AML reforms, the money laundering reforms, counter-terrorism financing reforms done. Government's doing that. Stop the subsidies which benefit the property lobby over ordinary workers. Do something about the Airbnb Mafia. Whack on a big extra stamp duty for foreign buyers. Address land banking by developers wanting to keep supply tight to keep prices high for their developments. And start taxing multinational companies like Airbnb and others properly. We've just had a look at the Google accounts this morning. They've gone backwards again, paying tax in Australia. Nothing on $8 billion worth of income. And then devise, with this money, for the benefit of all Australians, we can devise a real reform which will stem the rise of inequality and homelessness. It's easy to say it, isn't it? And it's much easier said than done. But thank you for your support. Please like or comment on this video.